Are you looking to invest in agricultural land as an investment, or do you already hold agricultural land which you are planning to sell? In this video, I'm going to be talking about the benefits or exemptions available in the Income Tax Act with respect to income from agricultural land or capital gains from sale of such agricultural land. I'm Yashwan Nijgal, a chartered accountant in practice. Every week, I post one video which will certainly provide you with valuable financial insights. A lot of us are looking at agricultural land or agricultural property as a lucrative investment, whether to actually cultivate agricultural produce or building farmhouses or keeping it as an investment. But what people are unclear about is the tax implications on the different sources of income from such agricultural land. So let me tell you the different kinds of income which one can get from such agricultural land and what are the benefits or income tax exemptions available for these different agricultural income. So under the first category, you will actually have income from sale of agricultural produce which is grown on your agricultural land. You can do this in two ways. One is you can personally ensure that the agricultural activities are carried on and any sale of produce from such agricultural activities can be sold in the market and such income is exempt from income tax. And the second option would be where you don't have the time to do it on your own and you give the land on lease to someone else and they do the agricultural activity, and any income which you receive in the form of a lease will also be exempted from income tax. So under the second category, which is basically for sale of such agricultural land, we need to understand the definition of an agricultural land as per Income Tax Act. So the agricultural land as per Income Tax Act can be subcategorized into two types. One is a capital asset and one is a non-capital asset. Now we need to understand that only income from sale of capital asset will be considered as a capital gain and will be taxable under Income Tax Act, and the sale of non-capital asset will not be considered as a capital gain and will not be taxed under the Income Tax Act. Any agricultural land which is within the jurisdictional limits mentioned in section 2 subsection 14 of the Income Tax Act will be considered as a capital asset. To make it more clear, in a city like Bangalore, a land which is situated at least 8 kilometers outside the municipal limits will be considered as a non-capital asset, and any income from sale of such agricultural land would be exempted from income tax. So one might ask, what are the benefits available for sale of agricultural land which are within the municipal limits? Now in this case, there are certain restrictions. For example, you should have held this land and performed agricultural activities on this land for at least 2 years or 24 months, and the proceeds from sale of such agricultural land should again be invested in another agricultural property so that you can claim exemption for such capital gain under section 54B. So the third category would be income from farm stays or home stays which are developed or constructed on an agricultural property. It should be noted that such income will be clearly considered as a rental income and 100% taxable as per Income Tax Act, and no exemption can be claimed on such income as agricultural income. The general perception in India is that agricultural income is not taxable as per Income Tax Act. However, as I've already mentioned, this cannot be a blanket statement. Either reach out to a professional or make sure that you know these provisions well in order to avoid any kind of scrutiny from the Income Tax Department. And as always, no tricks, no hacks. Follow me for valuable financial insights.